All right.
Oh,
Welcome in, y'all, to the official Better Books Workshop. Dr. Alex Engar here with my amazing co-founder, Dr. Will Boyd, heading up the chat for us and moderating everything. Today is all about how do we get our books to look better? And there's a lot of reasons we will want to do this. I mentioned before we started recording that if you're here watching this, whether you're on live or on the replay, it speaks to the quality of business owner that you are, because most business owners wouldn't care enough about this to show up. Also, interestingly, most business owners aren't profitable. What does that tell me about you? Well, it tells me a lot. And so what we're going to do today is walk through about a 20-minute, maybe 25-minute walkthrough of how do we make sure our books are clean so that we don't get hosed. So without further ado, let's do this. And by the way, if you're on here live, by the end of this presentation, we'll give you the Better Books checklist. If you're on here live and you want it right now, pop your camera on and we'll send it over to you as a thank you for being attentive and engaged. And if you're watching on the replay, you can hit all the buttons below to get your copy. Okay. So let's dive in. In the past, I have done drawings. Today, I was like, we'll get a little more official. We'll do actual slides for this. And so this is part of our Profitable Scaling Lunch and Learn series. Let's dive into Better Books. So today is all about, let's see, I'm going to actually pin myself, not because I'm egocentric, but that way it makes it big for everyone. I am probably egocentric a little bit. I think we all are. But today you're going to be learning how to make sure your books are clean so you can make better decisions, avoid overpaying on taxes, and become bankable as a business owner. So real quick intro to who we are. I'm there in the red shirt, Will, my co-founder, there on the left. We're actually both former physical therapists who dove off the deep end into business consulting. We got really good at helping people make money and realized that didn't matter how much we helped people make, if they couldn't keep it, what was the use? And now we work with a team of all either former or current business owners who have had to go through this stuff themselves. And now we coach business owners on how to get a real handle on their finances, how to save the money that they want, how to pay themselves what they really want to, and ultimately to be able to grow long-term generational wealth, with their business being that main wealth engine. And we're honored to work with some really amazing business owners as coaches and our head of sales, who have all been in the trenches before. We know what you're going through, and we want to help you avoid the pain that some of us have had to go through to get here. So first principle here is responsibility as a business owner. A lot of times we want to delegate. We get into this mode of like, I can delegate everything. I can hand off. I can hire. I'm just going to tell you, your books are your responsibility because your money is your responsibility. Want you to take for just a minute. If looking here at the chat of all the different things that we have, we've got online OTs, we've got non-traditional practices, we've got some private practices, we've got restaurants. We service a number of types of different business owners. At the end of the day, though, if you had a client that had a poor experience because of an employee, that's still on you, isn't it? We all agree that that's on you to create the environment. It's not like, yes, we want to empower our employees to take responsibility. However, at the end of the day, it's your business. You set the code for what works and what doesn't, and what flies and what doesn't. It is your responsibility. And in the same way, your books are your responsibility, even if, and especially if you have a bookkeeper or an accountant. Yes, at the end of the day, we're hiring them to make sure that, things look good for us, but you're the one reporting to the IRS how much you've made. You're the one who at the end of the day signs off on everything. So it is your responsibility, which is why we're upping your level of stewardship and responsibility here today. So why this matters for you? Well, there's 4 reasons. Number 1, I want you to know that as your books are clean, it helps you understand where to focus in the business. So for example, we were sitting down with a client a couple months ago. We looked into his books and we found something that was like, wow, this number looks so different than what we would expect. Why is this so much lower than we were hoping? And it pointed us to where we needed to change profitability. And so we went and made this change. And then we got this great email where he said, hey, after we met this week and our scale call, where we have this kind of group call as a team, it was a really easy decision to go increase some specific rates in the business. He attached the rate increase letter, which was really cool. And he said, this should conservatively add $100K to our bottom line revenue over the next year. This gets really powerful when we get really clear on what's happening in our books. Number 2, why this matters. Well, you might want to avoid getting audited by the IRS. If you were to look at this for 10 seconds, see if you can spot the mistake. See if you can find it. there's something significantly off on these books. I started looking at these, and within 10 seconds, I was like, oh my gosh, what is that? All right, that's 10 seconds. If we go, let's go pencil, let's go this right here. There's a $19,000 federal tax payment sitting as an expense on their P&L. And I said, that's interesting. Tell me about that. And so when we got into it, this was actually a personal federal tax payment that got paid through the business because the owner hadn't understood how business taxes work. And their accountant, who is also their bookkeeper, didn't even catch this, right? The bookkeeper, who is an accountant, who told them how much they need to pay in taxes. They know how much they need to pay, right? Did not catch that they were making personal federal income tax payments through the business and then counted it as a business expense. Do you think that when you go to file taxes next year, the government looks in and they say, oh, sweet, we're going through all your business write-offs. This wasn't even halfway through the year, right? $40,000 of federal tax payments as a write-off. That's interesting. We don't see that in our system. Audit flag, right? Not so fun. So avoid getting audited. We caught this. I actually had to push back for like 2 months with this bookkeeper and accountant for them to be like, oh, I get what you're saying. It's a personal tax payment. Like, yes, it's a personal tax payment, not a business expense. All right. That was number 2. Number 3 is I don't want you to overpay on taxes. We see this so much, whether it is a business expense that is missing or double counting revenue. I'll tell you, I learned this the hard way. I double counted revenue when I started up with this new entity structure setup that we have. I didn't understand how I was supposed to lead the bookkeeper to doing the books right. I double counted a significant portion of my revenue. And so guess what? I didn't even notice because we were moving a ton of money around that year. I didn't even notice. I just knew something was off with the taxes, and I pushed against my tax guy. And I was like, this is wrong. This is wrong. This is wrong. He said, no, this is right. This is right. This is right. About a year later, I found out, no, it was wrong. It was not a tax problem that was wrong. It was a bookkeeping problem that was wrong. And I overpaid, if you'll see here, to the tune of $22,000 of taxes that I then had to go amend and get back. Don't do this stuff. We had another client that double counted all of their revenue for years, didn't realize it. Every time they were transferring money from one bank account to another, it was getting counted as new revenue. Double counted for years. It gets really expensive. Number 4, why this matters is you want to become bankable as a business owner. We just went through the process of building a house over the last year and a half, 2 years. And I will tell you, if we did not have clean books, I would not have been bankable. So we were able to build this really fun house that we just absolutely love. We actually got the concrete poured today. It's up in a spot that we just absolutely love. There's this beautiful little hike overlooking a lake. We love this place, but it would not have been possible if we had messy books. And I'll even tell you, with clean books, it was still so much documentation to send the bank. A construction loan's like the worst possible loan you can get as an entrepreneur. But you want to become bankable, both for business purposes and personal ones. All right, so let's get into the Better Books checklist. So this is the checklist. I will give you the full version here at the end. Those of you who have your camera on will get it right now. We're going to dive step by step through each of these. There's a few different sections. There's a profit and loss statement section. There's a balance sheet. So we're going to go through these. Today is not about learning how the P&L and the balance sheet should, like how they work. We're going to look at just a quick checklist of what can I go through to make sure that my books are accurate. So first one that we have to knock out of the way, and this surprises me how often people don't understand this or have it wrong. We need to understand if you are using cash or accrual accounting. And you might immediately go to it and say, oh, yeah, I'm accrual. Oh, I'm cash. But there's a very unique distinction. The profit and loss statement that your bookkeeper is giving you might be accrual, might be cash, but what actually matters is how you file on taxes. So even if you think your accrual basis, and I have this for a lot of clients, they're getting accrual basis profit and loss statements from their bookkeeper. So they're looking at accrual all day long, but then they go to file taxes and their accountant is actually doing it on cash basis. You might want to know that. So how do we go do it? Well, if you're an LLC, then it's, and you're a simple LLC, kind of single member, then you're probably reporting whether you're cash or accrual on what's called Schedule C on your Form 1040. It's kind of the main personal tax forms. And you can see right down here, it asks us for accounting method. So look at your Schedule C, look at the top there, accounting method, and see which box was checked for last year. Okay. I have a lot of clients that we found over the past few months where they thought they were accrual basis. They were actually cash. Okay. If you run an S Corp or you're taxed as an S Corp, then if you go to your Form 1120S, which is your business tax return, page 2, again, right up at the top, check your accounting method up there, okay? Really important to go see because this dictates a lot of how we should be looking at books. And it's mostly for people who think they're on accrual, but they're really filing on cash basis. It gets messy, okay? So just make sure, hey, which one am I actually getting taxed on? And I want to be looking at that profit and loss statement as I'm going through things. All right, so let's dive into the Better Books checklist. So first things first, profit and loss statement after we set up with taxes. There's a few different categories within our P&L. First one is revenue. So the first question is, does my total revenue for the year look accurate so far, right? Does it look accurate? Pretty straightforward. Second one, are my sales broken out by category? Now, this is one that's a little bit more advanced, but especially if you have a business with multiple streams of revenue or different categories of products that you sell, I find it really useful to have my income broken out by product category. So for example, if I go grab a P&L here and I'm looking at this, a simple P&L will only show me sales, right? This is like sales, one line. That doesn't give me all that useful of information about the business. Our more advanced business owners have sales from category 1, sales from category 2, sales from category 3, sales from category 4, and sometimes even broken out in subcategories from there. It can be useful if you run a more complex business to know what categories you've got and if those categories are accurate. So you can talk with your bookkeeper and say, hey, can we go in and adjust, they call it your chart of accounts. Can we go in and adjust this so that I can be tracking this kind of revenue? And they may or may not be able to based on where the revenue is coming in. But if they can, it's nice to know, okay? Number 3. So by the way that this whole thing is structured, anything that is green is I want this on my books. Anything that is red, it's kind of a red flag, right? I don't want it or I want to be careful about it. So this next one is, has sales tax that I've collected been included as revenue or income in my business? We caught this with one client where they were reporting because it showed through their, it was collected in their payment processing system as sales tax, but then their payment processor just lumped all of that money into one deposit into their bank account, and their bookkeeper hadn't been aware enough to check. And so they were counting their sales tax as revenue. But guess what? Then they weren't counting it as an expense later on. And so they were getting double taxed on that money. Like they're collecting sales tax from customers and then paying that money directly to the government, but then they were getting taxed on that sales tax revenue. No fun. We don't want to get double taxed. So ask your bookkeeper about that one. Second or last one here is, have transfers been categorized as income? And I'll just tell you, this one happens all the time. Literally every month I'm sitting down with clients and we catch this. So the easiest way to do it is to go into your profit and loss statement, especially if you've got access to something like QuickBooks or Wave or whatever your accounting system is. You go in there and you scroll over to sales or revenue and you click on that number there and it'll open up the menu and show you, hey, here's all the revenue things, right? Just go through and double check. It takes you 20 seconds. Double check that none of the revenue that your bookkeeper is counting is actually just a transfer from somewhere else. Okay. We catch this literally all the time. That's a big no-no. Okay. All right. So that's on the revenue side. Next, cost of goods. Is my cost of goods value accurate? Does it look like they've captured things? So if you have a materials or direct labor cost, does it look right? The second one there is, are my COGS categories correct? Now, I don't think on this example, I chose too simple of one. They don't have cost of goods. But for a business that does, I want to be sure that they're capturing my cost of goods and I've got the categories split out correctly. And so you need to talk with your bookkeeper, or if you have a CFO or a financial consultant in your business, you can talk through, hey, what categories should be listed as cost of goods? And there are some legal ramifications around what you classify as cost of goods for the IRS. You can talk with your accountant about that. But if I have a bunch of materials costs that are hidden down lower in my profit and loss statement as an expense, and I go to look at my gross margins, it's like, wow, I look so profitable for my gross margins. That can throw off our decision-making big time, okay? So make sure that those categories are correct. All right, next we're moving on down to expenses. So all the other stuff in our business. First one is, are they accurate, right? As you go down, you look at total expenses. Does that look right to you? Just yesterday, we were doing a monthly review with a client. We were looking at their expenses and they said, they're missing so many expenses. They don't have my rent payment in here, which, by the way, rent, for whatever reason, rent slips through for a lot of business owners, especially if they own their own building in another entity and they pay that entity rent. Then sometimes it looks like an owner's distribution. We get all kinds of weird things going on. So really make sure that your expenses look accurate. Next, are my personal income tax payments included as an expense? And we really wouldn't want this one. We saw that example earlier. Personal tax payments are personal tax payments. We don't want to pay them through the business. And you just shouldn't even be paying them from the business account to begin with, because if you do, it's going to throw off your bookkeeper, or it may. And so then we're counting that as an expense when it's really not. If we hadn't caught that in that other client's account, then she would have gone paying something like $3,000 a month for the entire year, which is like 36 grand. And then she would have taken 36 grand as less profit than she really should have. The government would look in and say, gosh, you owe us an extra 10 grand of taxes and a bunch of penalties. So this gets really expensive, and it's a no-no for the government. Okay. The next one is sales tax. We talked about this on the income side. Is sales tax collected as an expense on there, right? So, or sales tax that I've collected, is it counted as an expense? So if it's up here in revenue, but then I also count it as an expense, I'm good. If it's not up here in revenue, then I probably can't count it as an expense. And if it is in revenue, but it's not counted as an expense, then I'm getting double taxed. So I got to be careful. All right, moving along. Owner distribution. I see this a lot, especially for people who do their own books, that they're counting their owner distributions as a business expense. If you're an LLC, you're just taxed as a single member LLC or even a partnership, and you are counting your owner distributions or owner draws as a business expense, please talk with your accountant to make sure that you're doing that correctly. If you're taxed as an S Corp, that's when we get to start having some of your salary, your W-2 salary, as an expense. But otherwise, you got to be really careful about this. I see this one all the time when either new bookkeepers are doing someone's books or an owner's doing it themselves. And then they report, oh yeah, I paid myself 50 grand. It's like, that's not a business write-off if you're a simple LLC. Get tax advice on that one. All right, finally, net income, right? Bottom line, our profit on there. Does it look accurate to you? Or does it look like, hey, that's wrong? The last thing I'll say here, I didn't add this as a checkbox, but maybe I should, is I see profit and loss statements change over time. So let's say I look at a P&L in February. I'm looking at my January P&L and I record the numbers, and then I move on with my life. The next month or the next month or the next month, let's say it's now June and I'm looking back at the year. I see this all the time. I've caught probably 5 of them in the last month, where a bookkeeper, quote unquote, closed out the books in January and they said, yeah, here are your final books in February. And then they go back and make some kind of change for whatever reason. And then you didn't catch that. And now it's June and you're going through. I catch this all the time, literally all the time. And I can't wrap my mind around why they're doing this so much, but they'll deliver you your books. You feel like they're closed, and then they'll go back in and still make significant changes. We had one person that, because we record those values every week in our dashboards that we use, every month, they had overestimated income by like $50,000 one month, and then never told the business owners, oh, wait, sorry, we had to go change January. You actually made 50K less than we thought. It's like, that would be nice to know. I see that all the time. So I like to check my P&L each month for the last months of the year and see, hey, each month, how was it going? So you can, in QuickBooks, you can get a P&L that shows you, here's January, here's February, here's March, here's April, all kind of separate. And it's nice to double check that. All right. Next, let's move over to the balance sheet. This is the least understood financial document for a lot of business owners. It's pretty straightforward, though, really, when it comes to it. I see more mistakes on balance sheets than I do on profit and loss statements. Balance sheet mistakes are just like, it is rare to not find one. And so as we're sitting down to do our one-on-one reviews with clients, this is the first place I go to see, where are we off? So first one is, are all my bank accounts listed? You would be surprised. You're going through your day and you think, oh yeah, my accountant or my bookkeeper has everything. And they don't know that you opened up a new credit card account 3 months ago. And so they're not capturing any of your expenses. That's a problem, right? Then we're paying more taxes. And so you think you're swiping your credit card thinking you're getting all these great tax breaks. You're not, because they didn't connect the account. So are all my bank accounts listed? Next, are any personal accounts listed? I've caught this a number of times in the past couple months where your personal bank accounts are listed on a business balance sheet. We don't want that. Number 3, are the bank balances accurate? This one is wrong so often, and I have no clue how. But I'll just tell you, when a mistake is made on a bank account balance, oftentimes that mistake can propagate through for years, and they just keep carrying it. Some of you are nodding. You might have seen this before. So check your bank account balances. It doesn't need to be every single month, but every so often I'd go back in like, okay, what are they saying I have in the bank? Does that look right?
What's the matter with you?
Is that how much I actually have in the bank? Okay. Next, are all my current assets listed? So all the things that I own. For example, if I bought a new truck, I want to know that that is on there. We have one business owner that we work with that has a ton of different assets, a ton of different things that they own. And we were going through their balance sheet, and I was like, hey, we look at debt really in detail with our business owners. Say, you mentioned that you have all these loans for these different vehicles. I don't see a lot of those on the balance sheet. We looked. Oh yeah, none of them are on there. What's up with that? Well, guess what? If they're not on the balance sheet, then your accountant isn't going to know to be able to take that as an expense in the business, to be able to depreciate it. And so again, we're losing out on huge tax savings. So we found, I think it was 6 assets that this business owner did not have listed on their balance sheet. It would have cost them thousands of dollars every single year in taxes. Wild stuff. Next, do all the asset values, so what they list on there is the value, do they match the price I paid for them? So sometimes you might have bought something and you put a down payment on it, and your accountant only listed, or your bookkeeper only listed the down payment amount, not the total value of the vehicle, right? So look at that. That one happens all the time. And finally, have asset values changed between one balance sheet and another? Again, I don't know how this happens, y'all, but it does all the time. We'll go back and we'll look a few months ago at the balance sheet, and then I'll compare it with the balance sheet now. It's like, wait a minute, they changed the value of your truck by $25,000. What's going on there? And that, I see values jump around all the time. It's like, oh, sorry, yeah, whoops. Like, whoops, what do you mean whoops? Don't touch that. Don't whoops me. There's so many whoopses that I get, and it's like, as business owners, we expect to be able to delegate our books fully and completely and competently. And I'll just tell you, in my experience, I now have less trust than ever with bookkeepers. I love them to death, but I love them to death while verifying that the work they do is accurate. Can we say that? All right. Next, liabilities. So this is the stuff I owe. If assets are what I own, then liabilities is stuff I owe on, right? So the first one under liabilities are all my credit cards listed. This one we find a lot where we're missing some. Are any personal cards listed on there, which I do find that one. Are my credit card balances accurate? And the way that they're supposed to do this is to look and see at the end of the month, or whatever reporting period you're looking at, how much is my balance on that day? It's a snapshot in time. So this will look different than what your statement balance says, because your credit card statement can close on, any day of the month, right? It might close on the 12th. But then after the 12th, you're going to make other purchases. And so your balance might look bigger, and you're going to make other payments. So it might look smaller. So the credit card balance thing is tricky, and I see it be wrong all the time. And then finally, are any other loan balances that I have, including any loans to the owner, to you, if you've put money into the business, are those loan balances accurate? This is the most common one to see wrong, because oftentimes your bookkeeper doesn't have access to your loan portals, right? And so we have to manually send them that loan balance, or manually send them some kind of transcript that shows, here's the updated balance. Okay.
Alex,
Finally,
real quick.
Yeah.
Alex, real quick. I'm gonna have to run here in just a sec, but Kelly wanted to know, or had a question real quick while it's on, before I forget. She wanted to know, are 1099 subcontractors classified as COGS or as an expense?
It completely depends on what they're doing in your business. So if they're someone who is contributing directly, and we'll do Q&A here at the end. I'll save a few minutes because I don't have a call on the back end of this, Will. So sorry, you're going to have to go. We'll beat a couple minutes over the half-hour mark, y'all, and I'll answer that fully. Cool. Beautiful. Will, thank you, dude. If you got to run, go for it. Let's finish up here with equity. This is the least understood part of all this. And then Kelly, I'll totally get to your question. By the way, if y'all have questions through this, and you're like, ooh, what was this? How about this? Drop it in the chat below, and we'll do Q&A at the end here. Cool. Finally, equity. And I'll also give y'all the link to this if you haven't gotten it yet. Equity is my lifetime owner payout. And that is an Alex word, not a bookkeeping word. But basically, they're tracking how much you have paid yourself across the life of the business. how much you've physically taken out of the bank account to pay yourself as an owner distribution, not the W-2 salary portion, because that's already calculated elsewhere, but the amount that you take out as an owner draw or a shareholder distribution if you're an S Corp. Does that look accurate? And so where do I find that? Well, if I'm sitting here on a balance sheet, it might look like this. So I go down to where it says equity. Here it's called shareholder distributions. It's always going to be it's generally going to be a negative number because it's money you've taken out of the business. And this is supposed to be a rolling total amount across the life of the business so that all these numbers balance out. So kind of interesting always to see too, like, hey, how much have I taken out of the business? Or how much did I think I've taken out? Or it might be called something like member activity or draws. Okay. So in this case, this is saying, hey, over the life of the business, this business owner's taken out 139,000 and we still have this amount left in kind of what we call retained earnings, or over time, how much have you made total profit minus what you've already taken out? That's what retained earnings is. Okay. So whatever they call it, whether they call it something like, it might be called your capital account, it might be called member activity, it might be called a shareholder distribution. It just depends on your business type and your bookkeeper's preference. But how much have you made? Okay. And then I can always adjust too and see, hey, what did they say I took out last month? So if I'm kind of going here and I'm saying, last month it was at 100,000 and now it's at 110,000 a month later. Did I really take 10,000 out of the business or not? Right? Might be nice to double check that. And if you see that number and you're like, that is astronomically high, there's no way I've ever taken that much money out, you can challenge your bookkeeper on that. Like, hey, I don't feel like I've taken that much out. Can we dive into this? They're going to hate that conversation, just a heads up, but you can appropriately challenge them on that. Finally, does the net income number match my year-to-date net income from my profit and loss statement? So if we go to P&L, down here at your P&L, we see our net income. It's our profit so far for the year, if it's a year-to-date one, which this is. And then we would expect that matches our year-to-date net income on the balance sheet. Those two are supposed to match. This one resets every single year, but it should match. And I have found times where these don't. And it's like, whoa, wait a second. What's the discrepancy going on here? Because all this math should exactly add up. Okay. That is everything that I wanted to go through today on the Better Books checklist. So as a quick summary, number one, you are responsible for your books, not your bookkeeper. Their job is to do the work. But at the end of the day, you're signing your name on the line that this is accurate, and nobody else cares about you and your finances the way you do. So be responsible for it. Hopefully this checklist helps with actually being able to have a handle on what to look at and how to appropriately challenge. But if this is something that you're like, ooh, I really want help with this, not just with the books, but I really want help with making sure that both my business finances are dialed in and my understanding of the finances are dialed in. That's exactly what we do at CEO Finances.
Listening during my lunch
And
break.
so if you want to, you can hit our website at ceofinanceacademy.com. And I could find the link. There's a direct link to book a call. But we'll sit down with you for 15 minutes. We'll get a sense of where you're at in your business, what it is you're looking to do, and give you advice on the next best direction to go. And if it's working with us, we can look at a deeper level at what that looks like. But you'd be sitting down with Scott, who built and sold his own business and learned the value of getting a handle on the numbers. And so if that's something that you want, that's exactly what we do at CEO Finance Academy. And we'll sit down when we work with clients, we'll sit down one-on-one to figure this stuff out, get a handle on where you're at, and step you through a step-by-step process towards getting things really dialed in, making sure that you have real clarity on your numbers, making sure that the systems are in place for you to manage the finances easily, and install really simple processes so that you can handle the money on a regular basis without having to spend a ton of time, but make sure that you get paid, the government gets paid what they want, and the business gets paid for future growth. That's what we do inside CEO Finance Academy. So questions now. I've got a couple things I'm going to drop here. First, I will drop the checklist in here. And if you're on the replay, then you're welcome to go click the button below and grab it. There's the link. And then I'll also pop in our link to book with us if you want to sit down and see kind of, hey, what is it that you might need to focus on next in your finances if you want to get a little bit of extra clarity. All right, that being said, questions. So we have Kelly, I believe, right? You had a question. Ooh, Kelly, let me see if you're still on here. I know I went over time on here. Yes, Kelly, you are. Beautiful. Let's check out your question. I think it was if 1099 contractors are cost of goods or expenses. So to be fair, that is a question for your accountant with how they want you to legally classify that. I'll just tell you from a business owner standpoint and having clarity on my number standpoint, if that person who's working for you is physically doing the delivery work of whatever you do or sell, then I do think of them as a cost of good, right? Because I'm selling their time ultimately. And so if that's the case, then yeah, they might be cost of goods. Otherwise, if a 1099 contractor is more on the administrative side of things or not directly involved with fulfillment or delivery, then I would personally classify that as an expense because that's more of an overhead kind of thing, right? There's a lot of debate in the financial world as to, hey, are we classifying the rest of our employees and payroll as a cost of goods? Well, if they're direct labor, yeah, maybe, right? Like we've got a guy who does roofing. The roofers that are going up on the roof, they are a cost of good. The people who are doing estimates, they're not, right? The office people are not. The owners are not. And so it just kind of depends. And you can work with your bookkeeper and accountant to make sure that they have things classified right. Cool. All right. I think this is everything. Other questions, y'all? We've got a couple more minutes for you. Any other questions from what came up today? And I would love to know, as you went through this, I just want a subjective rating. Like, how do you feel? Do you feel like your books are really solid? Just put solid if you feel like they're solid. Put so-so if you think it's like, I don't know. Or put not so great if you feel like they're not so great. So are we solid, so-so, or not so great? I'm curious where you feel like your books are. I'll just tell you for a while, I knew our books were done, but I had no clue early on in our business if they were right or not. And it turns out there's some stuff that was like, oh, we need to fix it. All right, we've got some not so greats, a lot to learn. Okay, some not so greats, okay, so a lot of not so greats. I would really recommend that you get a good bookkeeper if you don't have one, and I'm happy to make a recommendation for that. B, if you feel like, hey, I actually want some outside eyes on this, a third pair of eyes to double check it. Well, that's what we do as we work with people. Need to get these numbers in my business. You'll be hearing from me. Good stuff, Luis. Let's see. We had a great question come in from Tiffany. What if it's a teacher coming to teach a class in your business? Is that an expense or a cog? Now, if your class is your product, and we do have people who have education-based businesses where they're selling classes and then they're paying contractors. Personally, from a business decision-making standpoint, I would see that as a cost of good. Because if you're selling classes and someone else is teaching classes, then from my perspective as the business owner, that is a cost of good because that's my product, right? I'm selling someone else's time. From a bookkeeping standpoint, they may or may not let you categorize that as a cost of good because there's some, again, there's some IRS rules around what you can and can't. Okay. But mentally, that does for me look like a cost of good because I'm trying to see how much does my cost of good leave me with at the end of the day. So if I charge $100 for a class and I pay my teacher $20, then I've got 80 left over. That would be what I'd call gross margin. And gross margin is all of our income minus our cost of goods. So great question. All right, I'm doing bookkeeping catch-up. So bookkeeping catch-up is necessary, expensive, and no fun at all. Because people will charge you for back catch-up and they'll ask you 1.5 million questions. If you're going through it, you know what I mean. Yeah, not so fun. Cool. All right. I've got a couple of different bookkeeper recommendations, Brian, which if you want them directly, you can just email me, alex@ceofinanceacademy.com. I'll pop my email in here. It depends on where you're at in business. Shoot me an email with your revenue and your business type. And because it depends if you're low revenue, if you are a simple business and you're under $1 million, I've got someone who would be the best. If you're over that, I've got someone else. And if you're significantly over that, I've got someone else. So it kind of depends on where you're at and what business type, because not every bookkeeper is suited to work with every business. And some of them don't have experience with every business. As a beginner to bookkeeping, what app is best? So that's a great question. Most bookkeepers will use QuickBooks. just across the board, once you hire a bookkeeper, almost across the board, they'll want to use QuickBooks. I find QuickBooks to be overwhelming. And so in the early stages, I would say my thing was a spreadsheet. I built my own spreadsheet, and we have those available, like a beginner level spreadsheet for profit and loss statements. But once you get to the point where you are doing it yourself and it's complicated enough to really need software, that's when it's like, I would really look at hiring a bookkeeper. Cheap bookkeeper can run you like $150 to $200 a month. It's not that expensive. And they'll do all the things for you, right? And so you have to look at the value of your time versus all that. But I'll just tell you, I've seen a lot of clients use Wave, W-A-V-E. I've got a lot of clients on Xero, X-E-R-O. FreshBooks is another one that you can look into. There's not one that's quote unquote best. QuickBooks has a fairly high learning curve for a lot of people. Some of the others tend to be a little bit simpler, but QuickBooks tends to be a little more powerful. And I will tell you, a lot of my clients who are on other platforms, as they grow, end up shifting over to QuickBooks just because of its ability to adapt to so many situations. That being said, QuickBooks customer service is terrible, like just absolutely terrible. Don't use QuickBooks Payroll. Let me just save y'all some time. Don't use QuickBooks Payroll. All right. Good stuff. Any last questions? If not, we'll bounce. Visit us at ceofinanceacademy.com if you want to book a call with us. There's a link there to book a call, and otherwise we'll send this replay out to everyone at the end of today. Thank y'all for being here. We appreciate you, and we'll catch you next week. We're going to be here same time, same place for another Lunch and Learn. We'll see y'all.